Hey guys, thanks for stopping by thetradinganalyst.com. This is Taylor, and we're going to get into my thoughts on the market. I haven't been doing a lot of videos lately, but I'm making one now because I think we're at a pivotal moment in the market. And if you're coming to me for the first time, this is the first video you've ever seen of mine, or even if you've seen lots of videos of mine, I think it's good to add some context to what I'm about to say, and this context is my performance. I'm not going to talk about it a lot, but I think it's important for people to kind of talk about their performance, because at the end of the day, that what they say can either be viewed as correct or incorrect, and if someone has poor performance in the market, why would you listen to what they're saying about the market? So anyways, this is my performance the last 1 year, so the last 12 months of performance. So this is August through August 2019 through August 2020, and I'm up 138%. I also manage money for other people as well. This is my personal account, but I also manage money for other people as well. So if you're interested in that, let me know. So now that we have my performance out of the way, let's get into some charts and my thoughts on the market. So spoiler alert, the premise of this video is going to be about why I think the market needs a rest. And there's a big difference between needing a rest and thinking the market is going to go into a full-blown, bear market, something like that. So a rest, I think, is a very viable dip. I think we are going to get a dip sooner rather than later. I personally have been riding this trend pretty much since the lows down here in the end of March, early April is when I started getting long again, and when I covered all of my shorts down here, and I've been riding that trend all the way up. Just last week is when I sold everything here as we met this all-time high peak back up here. I sold everything that I owned. I had some S&P 500 futures, some SPY calls, some long-dated SPY calls, and a lot of various other stock positions. So I think overall the market looks really good and healthy. So that's why I think just a rest is going to happen. And I also want to just kind of point out, I'm going to go over each reason why I think the market needs to rest. So first and foremost, you can see we had this. This is back in 2018, the end of 2018. You can see we had this big decline right there. Okay, see how big that decline was right here? Okay, we went from here to here. Now in March, we went from, and then conversely, well, let me show you this one. Okay, so then here in February and March, we went from here to here. So we went from higher, we were way higher, to way lower too than that low. Okay, so a huge decline. Now, the bounce back right here, you can see all the way up to there before we had any real retracement. We had mini dips here and there, mini dips. Same thing here, mini dips. Very small. It didn't break any significant moving averages or anything like that. You didn't get a significant dip until this dip right here, which was in May of 2019. All right, so there was that little dip. So it didn't happen until we had this V bottom up, and notice where we started, where we got the dip, where the dip started, and that's when we came back up to all-time highs right there. Boom. You can make a little triangle. The triangle is insignificant, but it just happens to make a triangle. So right here, so there was that previous all-time high. We had this big dip, and then boom, we rallied with no real dips until boom, we hit that previous all-time high, and then we saw the correction. Okay, right there. Now, let's look at this. So right here, all this way up without any real retracement, and notice where are we right now? We're right here at these previous all-time highs. All right, so that is one of the reasons that I think that the market needs to rest. This is one of the biggest moves without any kind of a decent retracement. And I'm talking about ever in the market, ever. Not just recently, but ever. And you can clearly see that. I mean, this is back in 2019, 2018, this was a big dip. That was 20% right there. And we came back up. We retraced all of that back to all-time highs before we saw a dip. Right here, this was what, like 40%, something like that. So almost double. And then we reclaimed all of that. So an even bigger dip, an even bigger recovery than this action right here. And this is one of the biggest moves up without any kind of a dip. So, you know, dips are completely normal market behaviors. Okay, this isn't some unusual thing. You don't have to be scared of it or anything like that. And you don't have to be a bear to think that the market is going to dip. So let's move it on to the monthly chart for the S&P 500. All right, so I already have this drawn right here. So you can see this is the monthly chart for the S&P 500. I'm moving my face out of the way. So you can see here, this is that upper trend line. All right, this is going back 10 years. All right, 10 years. You can see right here, rejected, and then it saw a little decline right there. Okay, you can see once we came up to it, right, we almost hit it right around here, and then you can see the market traded sideways for a bit before heading higher. Here's another one. This is the end of 2017, the beginning of 2018. Right here we hit it, and then we took a dip. Right here on the monthly chart, it looks like, you know, these little dips, they look like nothing. But trust me, when it was happening, people were panicking. Here's another one. We came back up to it right here for a second test, and then that was the end of 2018 bear market right here. All right, here's the next retest right here. Just recently in January of 2020, right here. You can see we came up, we hit it, and then we got rejected and headed lower. Now here we are again. A big move up, and look at where we are. Right here against that upper trend line. All right? So that is another reason that I think that we could see a retracement from here. All right? Now I want to kind of zoom in a little bit and show you this action right here. So the next thing I kind of want to discuss is each time that we've come to all-time highs recently, we see some kind of a retracement. Okay, you can see there was that all-time high right here. You can see we broke over, here's that previous all-time right there. We came into it, we broke over it a little bit, and then we retraced. All right, so here's that next all-time high, which was right here. You can see right there, previous all-time high, we came into it right there, and then boom, we saw this retracement. Now on the monthly chart, this doesn't look like anything, but this was a real retracement. It was about a 10% dip right here. All right, so, and then eventually we came back up, and then we broke over it. But the first test of it is when we got rejected. First test here, boom, got rejected. Then came up and retested that same level, boom, got rejected, and then eventually we came and we broke over it. But it really took quite a while to break over it, really, I mean, we kind of broke over it here, but we basically just traded sideways right here. It wasn't until like 5 months later that we actually broke over it. Okay, so a lot of resting in the market. And then here we go. Here's that previous all-time high right here. You can see, boom, here we are. This is the first test right here. Okay, first test. And remember, the first test rejected, here we are again. This is the first test. So my thoughts are more than likely we'll see some kind of a rejection or rest period in the market. Again, this is totally normal action as it stands right now. It looks like more like we'll see maybe like a 10% dip, something like that. I'm not trying to pretend like I know exactly what's going to happen, but that's kind of my best guess. 10% dip, and then we kind of chop around for a little bit until maybe after the elections, something like that. And that is, historically speaking, what happens in election years. If you remember, when Trump got elected back here, where was it? The end of 2016, right here. So November 2016, you can see right here, trended up in the summer, March, April, May, June, July, August, and then we just traded sideways right here until here we go, the election, November right there, 2016, and then after the election, we headed higher. So something similar to that could happen here. Again, I'm not trying to say exactly what is going to happen in the future. I really don't know, but I feel very comfortable being all cash. I have no positions in the market, and I'm up 138% in the last year. I've been participating in this rally the whole way up, and I just sold last week. So again, the next thing I want to cover is some individual charts of the leaders of the market. The market typically trades with the leaders. So, Apple, Amazon, Google, Facebook, these are the highest market cap companies, and generally the market trades with them. So if they're going to head higher, the market's probably going to head higher. If they're going to head lower, the market's probably going to head lower along with it. So let's cover those right now. All right, so this is the monthly chart for Facebook going back 10 years since its IPO back here in 2012. So as you can see, it started right here. Every time it has hit this level, it has taken a break. Okay, so again, it doesn't look like much of a break here on the monthly chart, but trust me, when you're looking at the daily chart, this is a pretty significant dip. For example, the high over here was 71, and it went as low as 2 months later, 54. I mean, so what is that? 20? That's like 40% or 30% dip right there, just from that little blip right there. So these dips are significant. Next time, here we are coming into the upper trend line right here. You can see when it had this big upper wick against it, that's when it started the trend down. Okay, so as you can see, that's a big dip. We went from 220 all the way down to 120. That is what, like a 45% dip. Significant dips here are occurring once it hits that trend line. And here we are once again. The month is not over right now, okay? So if the next 2 weeks are extremely bullish and we just blast off over this, then maybe we can invalidate this chart, something like that. I don't know. But as it stands right now, with about 2 weeks left in the month, we've got a topping tail here against the upper trend line. Remember last time we hit it right here with that upper wick, big upper wick, saw that decline. Okay, so that's what we're looking at here for Facebook. Facebook is a huge mover and a shaker for the market. So here's Google. This is going back 10 years. This trend line has been keeping Google in check. Okay, so it started here. You can see it hit it here, big decline. Started here, or hit it here, big decline. Hit it again, big decline. Here's that most recent hit right here, big decline after that. Here we are again, and you can see Google already had a big topping tail last month against it. Okay, so this is like this month right here, big topping tail. The following month was red. So right here, we're still under that trend line. Google is a big mover and a shaker. Okay. The next one is, and this is going to be, I'm going to cover the daily chart. All right, and you know, this is going back 10 years, and you can see that this is basically the most straight up Apple has been. All right, so I want to discuss one thing really quickly. So this low right here, this was in the end of 2018 from that bear market right there. We were at about what is that? Like 140 or so. Okay, let's just call it 140 or 150, and you can see we went up to 320 right there. Okay, so from here to there, that was about 100% move. 150 to 320. Just for lack of, let's just keep it simple. 100%. I know it's not exactly 100%, but and that was one of the biggest moves it made without any real significant dips. But even then, we saw an okay dip right here, a little mini dip here, but this was a decent sized dip right there. Okay, this current move from here to here is, we're at about 460 now. It was at about 230 right here. So 230 to 460, it's a 100% move. So 100% to here, 100% to here, and that's when we saw the decline. The difference, though, between this move up 100% and this move up 100% is our current move is basically straight up. We didn't have any significant dips. Okay? I mean, look at this. This is just a straight V. It doesn't break the trend line. Okay? Right there. Whereas right here, this move right there, it broke that trend line right there, and that was about what is that? So like 220 down to like 170. I mean, 220 to 170, $50. That's like a 20% dip, something like that. We didn't have anything close to that in this. Okay, it's a V straight up with no dips. No dips. Basically straight up. And you can see when it does that for an extended period of time, we do tend to see some kind of a retracement. It's totally normal. You can see Apple is in a massive uptrend, and I think in maybe a few years we'll be higher here on Apple, no doubt about it. But right now, in the near term, I think that Apple needs to rest, and along with it, the rest of the market. So Amazon, same thing here. I mean, you know, I don't need to discuss, you know, every single little detail of all these charts, but, you know, Amazon has gone straight up. From here, this is about 1,700 to 3,200. That's about 100%. Okay, this big move here was about 1,000 to 2,000 right there. So from here to right there, that was that big big move up with not many retracements. Okay, we did get this pretty decent dip right there, but not a huge. So 100% from there, and 100% just recently from here to here. All right, because as you can see, before this move up, we traded sideways here for, I mean, like 6 months. All right, 6 months, and I got long down here on Amazon, and I sold around here, right there. Same thing I just did. Again, I didn't buy down here, but I bought once it started showing some strength right around here, and I just sold the last piece of my position just last week. 100% is, I didn't capture that, again, the entire move, but 100% for the stock in that period of time, very similar to how it did here before we saw this retracement. I think, history tends to repeat itself, and it's totally normal for a stock to need a rest. This is just totally normal. So Amazon, big mover and shaker in the market, and I think it needs a rest alongside of it. I think the market will need a rest as well. So let's move on to the next thing. So the next thing I'm going to cover here is small caps, IWM, the Russell 2000, and then I'm going to move to the banks, and I'm going to show you so XLF for the banks, and I'm going to show you the similarities between now, what's happening now, and what happened in 2009. Okay, so let's back it up to, well, that's not good, 20 years. Okay, so here we go. I already have this drawn out. So essentially what we have here is the IWM has been moving up decently with the market, but it's still lagging, the NASDAQ and the S&P 500 and the Dow as well. So as you can see right here, we're still below all-time highs, significantly below. So here's where IWM is currently, right here at about 160. The previous high was right here. We're significantly below that. Same thing happened here in 2010 after a big move up, big rebound in the market. IWM was lagging the S&P 500 and the NASDAQ right there. So yes, it moved up with it, but it still didn't. If you look at, for example, take a picture with your mind right here, and we'll go back to, the S&P 500, and you can see right here, for example, S&P 500 is back here at the all-time highs, whereas if you look at the IWM right here, we're nowhere near the all-time highs. So that's another factor right here. And as you can see, similar thing happened back in 2010. The market had a big rebound, but IWM was lagging it right there, and you can see a dip happen right there. So now let's move on to XLF, the banks. So very similar action right here. You can see the banks, huge decline right here, and right here, this action right here is what you want to look at. So you can see that banks headed higher, but nowhere near to the highs that it made in 2007. In fact, we didn't even come up to those until, really 2020 right there. So it took it 10 years to get back up there. Whereas, the S&P 500 obviously blasted beyond it. But this is the action you want to look at. So we didn't see the first real decline in the market back here in 2010 until the beginning of 2010. And XLF was a laggard, and you can see the pattern is very, very similar to it right here. So here's that previous high we made here, and then here. You can see we moved up, traded sideways, moved up, took a dip, sideways, and then up again, and that's when we saw a real retracement in the market. Now, we can't really see the action that's happened recently in XLF, but I'm going to kind of zoom in so you can see it. So you can see very, very similar action. A move up, sideways trading, a move up, sideways trading, and we're almost up to those highs right here. So banks, you know, a lot of people are looking at banks and small caps and showing that, okay, well, they're lagging, but, you know, imagine what happens if they're going to really start participating in the rally. And in my opinion, it's going to have, now if this was, you know, 3 months ago, I would have a different opinion, but the market has gone straight up, and banks and the Russell 2000 have not, they've participated, obviously. We're in an uptrend here. You know, everybody can see that, but nowhere near what the S&P 500 and the NASDAQ has done. So they are lagging. They are a lagging, two lagging sectors to the rest of the market. So what that means to me is that they are weak. And normally if you see any kind of, right now, the market has just been extremely bullish. The S&P 500 is all the way back up to all-time highs. The NASDAQ has made new all-time highs. I mean, we made new all-time highs like a month ago. And that's just crazy. Whereas if you look at banks, they haven't really done anything. So when the market is extremely bullish and banks haven't really done anything, to me, that says that imagine if there's any kind of just a little pause in the market. Imagine if there's an actual dip, like 10%. Well, banks are not going to, they're the weakest link. So most likely, they are going to see a bigger decline than the rest of the market. And I think that they're kind of a weight on the market. So that's my opinion on banks and small caps. And the other thing that's kind of just an anecdotal evidence of what I think the market is doing. I have two anecdotal experiences. One is, you know, everybody in my life and that knows me in the community or friends of friends or whatever, they all know what I do and that I'm involved in the market. And just this past week or two, I've gotten the most people coming to me, texting me, emailing me, seeing me in the grocery store, and everybody wants to get involved in the stock market. Everybody. They all say, oh, Taylor, I want to talk to you about getting involved, yada, yada, yada. That doesn't happen every day for me. I don't know that many people. Maybe I'll get like one person every few months come to me. But typically when I see them in bunches, I mean, I've had like 5 or 7 people in the last 2 weeks come to me and say that they want to start getting into the stock market. You know, let's just look at this. Nobody wants to get in at the bottom, but, you know, casual investors, they start to feel comfortable once we've been trending up for a while. They say, oh, okay, they start to feel comfortable. So that's another sign that I think the market is going to head lower. I'll give you another story, and I talked about this as it happened too. So I've shared this story on StockTwits and YouTube, but going back here to the 2018 bear market right here, I went to a wedding right here. Okay, I went to a wedding that happened right here in October. Yeah, it was October of 2018. My sister-in-law got married to my brother-in-law on my wife's side. So at the wedding, everybody was saying they wanted to get involved in the stock market. Everybody. And there were several people that hadn't, and this is the same as right now, but several people who hadn't been involved in the stock market, and I'll just kind of zoom out for this. Okay, here we go. So several people came to me that said they wanted to get involved in the stock market who hadn't been involved in the stock market for years. Okay, and now, right here, right there, that's when they wanted to get involved because they felt comfortable that the market had been trending up for all this time. They started to feel finally comfortable with the market. All right, that's what we call capitulation. All right, so same thing's happening right now. I'm seeing everybody coming to me that are casual investors that want to get involved in the stock market. I will give you another anecdotal experience. And, somebody on StockTwits was like saying that, this is a lot of, an awful lot of anecdotal stuff for an analyst. I'm not an analyst, it's just the name that I chose, 8 years ago when I started this website and all that stuff. So that's a stupid diss attempt. Anyways, but I factor in these things. I look at the charts mostly, but if I see and feel my intuition and my gut has served me really, really well in these anecdotal experiences. When you see patterns, okay, I've had anecdotal experiences happen before, 2018, but it didn't, I wasn't paying close enough attention to them, and really listening to them and listening to my gut, but now I do, and now these things kind of make sense. So another anecdotal thing that I will throw out there is that I have these neighbors, and they're smart people. They are casual investors, but they're really smart. The husband is a former Navy SEAL. The wife is a successful business owner, owns multiple businesses in town and stuff. And they make their financial decisions together. They both invest their account together. So anyways, they actually have really good timing in the market. They sold here in January. And this is, they go off of a lot of intuition. They just feel like they should sell. So they sold everything here in January. All right. And what do you know right after that? Big dip. Then, and they're telling me as this happens. So this is, this isn't hindsight stuff. They're like, yeah, we sold everything, yada, yada. Then go back to the lockdown right here, and they bought everything back, almost at the low, like the exact low. I mean, they bought one of these days, they put all their money back in right there. Now, just this last week, I was like, yeah, I sold everything. I talked to them about the stock market, and they were like, us too. So they sold up here, they bought down here, and they just sold again, up here. Again, I could be wrong, they could be wrong, but, this isn't, I'm not going to sell everything just because my neighbor did that, but this is just one little piece of evidence. Now, the other piece of evidence is that I don't follow these people on StockTwits, but what I like to call lurk on them, and these are people that I use as contrarian indicators. Okay. So, for example, these people have been bearish literally this entire move up. They've been short, they've been in bonds, they've been sitting in cash. Various people have done various things. And they've been fighting this tape the entire way up. Well, just last week, when I sold everything, these are like 3 different people, and they all bought stocks, energy, banks. These are the worst sectors that they're buying, and they're finally now buying it. So again, like I talked about capitulation back here in October 2018, same thing, capitulation. So that means basically they couldn't handle it anymore. They reached their breaking point, okay, their threshold of pain and loss. They finally met it right as we're back to all-time highs after this huge move up. Well, for people that have been bearish this whole way up and now they're turning bullish, to me, that's just another sign. I'm not going to buy and sell based off of these things alone. I've covered the charts for you. So there's a lot more factoring into these decisions than just that. But I think the evidence is mounting up that we will see some kind of retracement. Could be next week, could be the week after that, or it could not happen at all. But I feel very comfortable with my decision to sell everything because my performance has been really good. And, if I miss out on another 5–10% of the market, so be it. But I definitely think we'll see, unless the market is just going to do something that it's never done before and just head straight up with no retracement at all, I think we'll see some kind of a dip. So one more thing that I want to cover before I talk about an opportunity that you can take part in is there's a lot of divisiveness in the world right now. Everything with racism and the virus, everything is so polarizing, and we have this side versus that side. And I think it's really important to remember that we're not all that different, regardless of what the media likes to portray. The media shows the worst of everything. Okay, but if you walk down the street, people are normally pretty good people. Black, white, brown, yellow, purple, it doesn't matter. Everyone treats each other pretty decently, and I think that's important to remember. And also to just try not to be as divisive with people and show love. A smile goes a long way. I know a lot of people are wearing masks, and you can't necessarily show your smile. I think that's part of the point, but spreading love and joy and happiness, you don't have to be happy yourself or to spread that, and you feel better about yourself when you spread that to other people. And I think that when smiling at one person, it's some stranger walking down the street, has a huge ripple effect. You're not just smiling at that person is going to feel good about themselves, and they're going to go and treat their spouse better, or treat their kids better, and then their kids are going to treat their friends better, and there's just this whole big ripple effect. So don't underestimate the impact that you can have on the world. So yeah, those are my thoughts on that.